Καλημέρα σε όλους. Good morning, everyone. Thank you for being here early. I'm going to introduce in a while our esteemed speakers here. Thank you, Delphi Forum, for the invitation. I think it's going to be an interesting discussion as we're going to cover the topic of consolidation, capital, and competitiveness from different angles, public and private markets, banks, macro perspective, obviously, M&A, but also real estate. So we cover everything here. Conscious of time, I will go introductions one by one later on. I will start with Janus because he represents the market, and recently we have the acquisition of Euronext. However, Janus, I would like to give you, Janus Kodopoulos, the CEO of ATHEX Group, I would like to give you two questions, to lighten up the discussion. One is a little bit something that we constantly discuss about how the stock exchange and capital markets and basically be a place that we can sustain for providing basically capital for SMEs and large corporates. Lately, the market has advanced to an established market from emerging. So we're expecting some changes there. Despite the volatility, we see that we still have momentum. So what are the tools and the things that are required in order to have this sustainable growth for SMEs and large corporates in terms of tools? And being part of a large group as Euronext right now, what are the externalities you see that place the ATHEX and Stock Exchange at a different league, that you basically you can increase liquidity, free float, and attract institutional capital?
All right. I have to limit myself in terms of of what I have to say? Okay. Well, look, I'll try to summarize because we have a lot of speakers here, but the requirements for a public market to function well, especially in Greece, are the ones that they were present and required 4 years ago when I first joined this institution. So not much has changed. You have to be a relevant market where there is interest on the two sides of equation that we have in the market, the product, the corporates that want to come into the market, and the market participants that are interested in investing in your market. So, and you have to remember that you have to solve jointly. Greece obviously found itself in a situation where that joint equation was being solved at a really bad point, what economists call a negative equilibrium. Nobody wanted to come to the market, and the investors didn't want to come to the market. So what you want is the other equilibrium, and there's very little in between, where you have a lot of interest in companies coming to the market and a lot of investors that are looking to invest. So what I would say, especially, I guess, influenced by the discussion that was here just prior to us in terms of ambition and narratives, it's by now, I think, your question is probably less relevant. I would call it, in a less polite fashion, irrelevant, in the sense that that narrative has changed. And the way that we have to understand it, and I would urge everyone to think along those lines, is to look at data. Look at what has changed, the performance of the market itself, the momentum in capital raising, the pipeline and the actual arrival of new firms, both in our growth market and in our regulated market. We had 26 IPOs, 10 in the last year. We have a very strong pipeline in both markets for this year, 7.6 billion raised in the course of the last 4 years, and progressively those amounts starting from 22, 23, 24, basically they started about a little bit more than 1 billion, and they reached a little bit less than 3 billion last year. So that momentum and the data is what is required to kind of answer your question. Greece, and this is, in an investment, we always say, the past doesn't matter, but believe me, the past always matters. is the Greek market is the second most successful market in the course of those 4 years globally. And not just in 1 year, but actually in repeated fashion and during years which have been pretty challenging, like 2022.
Do you foresee this momentum going forward as we are entering, in a more mature stage?
Nobody knows, but to tie your question in terms of how I interpret things, you've reached a certain stage. Good. Are you to the promised land? Have you arrived? Are you in that positive equilibrium that we all aspire to? No, we need more. I think we deserve more. The economy actually points across all, possibilities of raising capital and helping the national economy and even the regional economy. We can do a lot more. The good thing, even though we cannot obviously predict the future, is that we have two catalysts that are kicking in. The first one is the evolution and the transition back to developed market status, which has been announced. Hopefully in the next few days we're going to get some news or at least an update from Stocks, which is the fourth rating agency involved in this. And it's going to play out in the course of the next 4 or 5 months for one of them, for FTSE, and a year from now with MSCI. These are critical aspects. The market doesn't wait for things to happen. They obviously try to anticipate. So that's the first catalyst, which opens, the spectrum of possibilities for Greece. And the second one is obviously the assimilation, let's say, of the Greek market into the Euronext platform. And that's really going to take shape in a more aggressive fashion when we get to the transition into the common order book, which is going to be June 2027. That also going to give us the next step up. It's like having a bullhorn and saying, look, I have something interesting here. You're competing with different alternatives, different capital options, and now you're given 2 new larger bullhorns. And the movement actually with Euronext is having a good commercial store in a side street that we have at least done something with it in the last few years, and now we're moving into the main street. So in that main street, none of this, and I'll finish with that, none of this means that you are, you're done just because those 2 things happen. They just give you the opportunity to do a lot more hard work. So the promise here is more hard work for us. And if we do it right, and if we are a little bit lucky, it will happen. So I'll stop here.
I'll come back to this point. I would like to go to Mr. Anastasatos, Group Chief Economist of Eurobank and General Manager. Tassos, the first question is more macro-related. RRF program stops this summer, 2026. We have seen and observed this growth in the market. So how do you think we can sustain, and can we sustain like this kind of growth, or we are depending always on these external funds from EU?
Suppose this is the $1 million or euros rather question. Okay, let's take a step back, try to see what we have achieved so far and how we did it. In the last, let's say, 5 years, the Greek economy did achieve substantial convergence to the EU average GDP per capita. However, to a large extent, this was achieved via an increase in employment, that is, decrease in unemployment, and not via an increase in productivity. Productivity, even today, remains relatively low. As a matter of fact, in terms of GDP per capita, is something like 7% of the Eurozone average, even lower in GDP per working hour, 26 out of 27. And why is this the case? This is because, despite the fact we did have substantial increase in investment, we are not yet in a position to have claimed back the losses we had in the previous years, in the crisis years, in our capital stock. The capital stock even today remains some 63 billion below the 2008 level. So we need more investment. So let me rephrase. The two goals of economic policy going forward should be, firstly, increasing investment in order to take back our loss in capital stock. And at the same time, we have to balance out our current account, which is still in deficit, and maintain balance in fiscal economics, which are in good shape at the moment. And the second goal, I would say, is to try to tilt the mix of our specializations, of the economy specializations, towards sectors with more gross value added, domestic gross value added, embodying more knowledge and higher technology. Why? Because today we are actually having a bias towards unskilled labor intensive sectors, and therefore this puts boundaries onto productivity. How can we achieve that? You ask whether the RRF can do the trick. Not really, not by itself. Even if we account all public investment with or without European money, at best this could be 1/3 of our total investment. So we need to be attractive as a destination for private investment as well. And how can we do that? If one sees price competitiveness, we are faring quite well, actually. We have taken back the losses of the pre-crisis period, and we're still quite okay in terms of wage costs and prices. Where we lag behind best practices is aspects of structural competitiveness. If one sees the indices of international organizations measuring, for example, aspects like, I don't know, the efficiency of the public administration, digitization, the degree to which higher education bridges the needs with a labor place, the simplicity and clarity of the tax and the regulatory framework, the speed of justice, we are still below Eurozone averages and averages for our group of countries. So this is where we should focus going forward. I think it's achievable. I think it's reasonable to expect gains, but it would be hard work. And the reason I'm saying that is because, as you know, structural reform has a very long-term benefit for all, but short-term cost for particular rent-seeking groups. So in order for them to go ahead, they need political consensus.
And Tassos, when you see Greece vis-à-vis its peers, in terms of structural reforms, as you described them, where do we stand? And how this plays out when we put it in the context of the crisis and geopolitical, crisis that we have in the Middle East and elsewhere?
There has been progress. I mean, if we see, for example, the World Bank indices or the WAVE indices, there has been progress in the last 5 years, but we're still below the Eurozone averages because we should compare with the Eurozone. This is our peers in the areas I mentioned. And I think one of the main areas that we lag behind has to do with the simplicity, or rather the lack of it, of the entrepreneurial environment, and the fact that the rule of law doesn't seem to be perceived by investors as being very strong in the country.
So, Mr. Salakas, Nikos Salakas, Group Legal Counsel and Chief Corporate Center of Alpha Bank. So, the last years, Nikos, Alpha Bank has announced a spree of M&A in the core and outside the core, assuming synergies, and to grow the business, right? In this complex structural, changes that we are going to discuss later on in M&A environment, what is the perspective, of Alpha Bank going forward as a bank, but also as a part of, executing deals for yourselves?
Yes, thank you. That's a very interesting question. I mean, we could be kind of discussing all day long, but I'll try to be as concise as possible. Before answering the question, I think we should be taking a step back and also look a bit, take stock of the Greek economy and where we currently stand, because I think that what Alpha is currently doing, which plays a very significant role in the M&A agenda, is what all Greek banks should be doing. We need strong and resilient banks because we need to advance the M&A agenda. So, Greek economy, we navigated through an unprecedented crisis for almost 10 years. We started exiting late in 2018, early 2019, and then we stumbled across the COVID-19 outbreak, which means that we've been navigating through a crisis for more than a decade as an economy. That said, we managed to recover, and over the past 5 or 6 years, we managed to record very impressive, I think, financial performance in terms of our sovereign financial metrics. We've recorded significant improvement in our GBT. GDP, excuse me, we've recorded significant surplus in terms of the position of our economy. We've seen a lot of reduction in the debt to GDP ratio. But where are we currently standing? And the answer is that we've just managed to return at the levels where we were when the financial crisis broke out back in 2008. In 2025, effectively, our GDP is expected to be at the same level. So it took us almost 17 years to recover. And in the meantime, the world has moved, has progressed, has grown, and so we need to catch up. And this is why we need to progress the M&A agenda. This is why we need strong and resilient banks to support this M&A agenda. And this is what Alpha Bank has been doing over the past 3 years. I mean, we've been acting in a threefold capacity. First of all, we managed to attract the first investment by a European bank into the Greek banking sector. Back in 2023, we struck a strategic partnership with UniCredit. It was the first foreign direct investment now at the level of 1.7 billion into the Greek banking sector after 17 years. And when we started this strategic partnership, which has now grown, we had a very specific target, and that was secure access both for us and our clients to one of the leading European banking platform. For us, it was important because we gained access to know-how and technology facilitating our exit from the crisis. For our clients, for the corporates having exporting activity, the ability to have access to top banking services in the 13+ jurisdictions where UniCredit operates. For the households, access to investment products of top quality. Now, in addition to this, we've been very active in the Greek market and outside the Greek market in terms of consolidating the market and growing both the balance sheet of Alpha Bank, but also making it a key player in the area of banking, investment, and insurance services, not only Greece, but also beyond Greece. So over the past 2 years, we've announced and completed already 4 M&As, and we have well progressed this year only 3 M&As, all in the area of financial and insurance sector. And all this has been the result of a very careful strategic thought and preparation. So we started with a joint venture in Romania with UniCredit, creating there the 3rd largest bank. We moved on last year with 3 bolt-on acquisitions, the acquisition of Flexfin, which is a fintech factoring company, moved on with the acquisition of Axia, which is an investment bank, effectively. And then we finished with the acquisition of the assets and liabilities of Astrobank in Cyprus. This year, we've just announced the acquisition of Alpha Trust, and we have also progressed well with the acquisition of Altius and the creation of strategic partnership with Universal Life in Cyprus, creating there the 3rd largest insurance pillar. Last but not least, we've been financing M&A and acquisition in Greece. And we've been financing large projects, concessions, which are now in the 3rd kind of generation, including the expansion of the Attica toll road, for example, or the expansion of the Athens International Airport, but also LBOs, not that we have both the know-how and the risk appetite. In a word, we still need to grow as an economy. We still need to continue our trajectory towards growth. We need a resilient and strong banks, and we now have strong and resilient Greek banks. We're operating with a common equity tier 1 ratio shy of 16%. We all record very strong profitability. We have very increased levels of liquidity. And we need, as a banking system, to support this M&A. And I think that Alpha Bank has strong evidence that we've been doing this over the past 2 years.
Great. I'll come back to a couple of points. Mr. Vasilis Petinis, Vasili, partner of RSM, you conducted a pan-European study with regards to M&As. So these strategic, M&As, as we call them, how do reflect, in terms of pricing? What do you see? And if you have seen, like, these deals lately changing in terms of appetite and pricing.
So thank you very much for the question, and I'm very glad to be here at the Delphi Economic Forum. I just want to highlight what Mr. Kodopoulos said about the new IPOs and the importance of having a competitive capital market, and what Mr. Salakas also mentioned about successful M&As. What is the important catalyst in this case? To have competitive companies, competitive targets. And this is what the 2025 survey of RSM in Europe identified. The fact that actually the competitiveness in the modern M&A, this idea of competitiveness has actually changed. So investors are not only looking for companies that have fast growth, they're looking for companies that have more stable and reliable growth, which is supported by technology and resilience. So the question is not about how we can grow fast, but how long-term value can be created. So a company today is considered to be fully competitive when the growth is not only high, but it's also high in quality. So this is the concept of quality of earnings, quality of revenue. So we're talking about revenue, which is recurring, revenue that creates long-term value, strong customer relationship, and most importantly, when revenue can be converted to cash flows, which is one of the key parameters of any valuation model. So we're not talking about only just growth, we're talking about sustainable growth. Of course, what investors are looking in this case is key performance indicators, which are more focused on let's say, churn, customer lifetime value. We're looking at the market position of the companies. And in this journey, technology is also a very important factor. We're talking about how technology is not just a narrative in this case. We're talking about companies that use technology as part of their core business model. It is embedded in their business model. And why is that? It's because when, let's say, data is used for strong pricing methodologies, when we're using AI in order to create more efficiencies and effectiveness, when we use digital platforms to increase scalability without, let's say, increasing the cost or increasing the complexities, then value is not coming only from past performance, but it's coming from the future potential of the companies.
Vasili, if may I ask something here, like, the use of AI and, ways of assessing during the GD, a target, how does it play right now? Do you see this emerging more and more in terms of due diligence process and down the road, or is already happening?
Yes, that's a very interesting question because, and it's something that we have seen at least in the last 2 years when we're doing due diligence as public accountants, auditors. What we have seen is that there are certain elements which are more of intangible basis, like technology, AI, infrastructure, which is not included in the past financial statements. So they're not visible in the financial data of the company because it's more of intangible nature. And in order to identify and try to measure these values, which are really creating and driving growth in the companies, you need to have new tools. And this is where the auditor's role starts to change. The auditor's role is not only confirmatory of the numbers, it's not only using, checking only the past financial statements to identify what went wrong. Due diligence nowadays is used to identify where the value is coming from. And using technology, we can identify all these future potential capabilities for growth and sustainable growth. Just to give you an example, we're using a lot nowadays, many tools within RSM, especially data analytics, that move us from doing manual work and work in samples of data. And we can now analyze big databases, and we can just don't go into the samples, but we can see all the population, we can identify outliers, we can see patterns in revenue, in customers, we can identify all these blind spots where the company is losing value. And AI, for example, is used a lot. We have developed a number of tools with my colleagues that help us in scenario planning. So we're not only trying to give an answer to investor whether the pricing is good, where to buy or not, is actually trying to identify, looking at the future. It's a more data-driven, forward-looking approach to uncover and unleash and reveal actually all the value that's coming from the future. That's how the role of due diligence has changed. And of course, we're not only looking about financial and tax due diligence, we're looking at other areas like ESG, we're looking at compliance, we're looking how technology of a company is competitive, commercial, of course, aspects, which are more difficult to measure. And that's why you need to have more modern tools as part of the due diligence process to be able to identify and give more viable feedback to a potential investor.
Thank you, Vasilis. Aziz Francis, last but not least in this round, CEO and founder of Brooklyn Capital. Real estate is a thing for you, right? You started a few years ago investing in Greece. How do you, from your investment thesis, basically, your initial investment thesis, has it changed since you've been on the ground, closing and executing deals? And Aziz, if you can make a quick comment, where do you see mispricing even today, despite the fact that real estate, since the beginning of this new kind of growth, has established new heights, and what kind of risks you as a foreigner coming in, typically a foreigner investor of real estate in a broader sense, underestimates?
It's a long question.
Make it quick.
Great.
So we can have another round.
I'm going to make it quick. Great to be here. I think I'm going to try not to repeat because a lot of points actually were mentioned. Talking about our journey in general, not a few years. I mean, we started Brooklyn almost going to be 10 years ago now. So I would say the thesis has been through a number of lives since we started. And I think the last 10 years in Greece could be, I think people are underappreciating the amount of change that happened to the investment kind of, I would say, landscape. We went through almost 3 phases that other countries would take 30 years to go through, which was a very accelerated recovery since 2018, I would say. And then COVID came, and then the inflation came. So, we've been through a number of kind of, I would say, shocks, but also dynamics in the market that required us to keep adjusting the investment thesis. I would put our thesis into 2 main buckets. The first one coming into the market was a recovery trade. I think everyone, looked at Greece as an opportunity to identifying a dislocation and trying to see how to express an investment thesis on the dislocation. that dislocation was across the board. We chose real estate because we felt it was the best risk-reward asset class and the most scalable for private capital in Greece. So it was, a conscious decision to enter into that, and I still believe it's one of the most scalable asset classes in Greece. We entered into a recovery trade, which was much more of a macro trade. It was a beta trade. And we can see that in our business model. Our first billion we deployed in Greece, we were 7 to 10 people. Our second billion, we're 35 now, and I think growing. The reality is we moved from a beta trade to an alpha trade now, alpha creation, where we need to be on the value add point, because the market has evolved in a way where more entrants have come, prices have adjusted. We're in an extremely normalized market. I'll tell you what's very specific about Greece, but as we operate as an investment firm, and I will talk about foreign investors, Greece competes now head-to-head with Spain, other jurisdictions like Spain, Portugal, Italy, and it doesn't compete on discount anymore. So it needs to be able to provide, opportunities to make money and to create profits that are attractive enough to bring in that capital. So for us, we moved from recovery to value creation. That means looking forward for the next 5 to 10 years, where do we see assets gaining value, and through repositioning, upgrading, or even straightforward greenfield development. And that goes through massive, I would say, changing our business model into a heavy execution on the ground, local execution model, and trying to differentiate our products in the context of the local competition that happens. So it's much harder to make money in Greece today than 10 years ago. And I think taking that into account, it's harder, but there's a lot of reason for optimism, because people keep thinking, and we'll discuss that. You mentioned mispricing. I don't think there's a mispricing anymore in Greece, but no market has a mispricing when it's in a normal state of affairs, when you have a solid banking system, a solid investor base. Mispricing is a bit of subjective conversation. It's more about subjective value. What do you think you can create value on that asset that maybe the seller doesn't see himself capable of doing it, or actually doesn't believe in that thesis? So it's not about mispricing, it's much more about relative value versus your competence and your cost of capital. Because different investors also look at totally different horizons and cost of capital. We are today, how we evolved, we're focused mostly on where we think we're leaning in on the strength of Greece. So Greece is at the center of some of the most interesting global trends. When you look at, South Europe, Florida, Dubai, there's a whole movement of capital and people and living where people are moving to jurisdictions that allow for quality of life, lower taxation, communication culture, and Greece is at the center of that. It has amazing characteristics that provide it to be, a platform to bring in, and that's not about tourism only. Obviously, tourism is one of that. It's not about residents only, because these residents now, they are so mobile, they bring their businesses with them. So I think there's going to be a moment where Greek business is going to see an amazing opportunity to grow, because people are deciding to move to Greece and Spain and Italy. By the way, this is a global phenomenon. That's one element of where we think. The other one is there's a massive stock in Greece because of the crisis and the investing over the last 15 years in Greece. It has a much higher proportion of underinvested assets versus any other market. So for people like us who are looking for add value, there's more and more opportunities to go in and upgrade these assets. And when I say upgrade, we're not talking pure luxury or prime. We're talking about quality, because that's going to be the biggest differentiation going in the future.
Is this brownfield, or is it,
It's everything. I think there's so much opportunity in Greece to deploy in upgrading the product, the building itself, the operations, the way things are conducted. You know, we're not even talking about AI, obviously, I can talk hours here, but we're going through one of the most transformative evolutions. You know, in 10 years, we're going to sit here, the world will operate differently. And I think, again, we're very optimistic because we think AI, in its first applications, addresses one of the core structural weaknesses of Greece. I mean, when you think of red tape, you know, competitiveness, productivity, all of those points that were mentioned, AI is an extreme catalyst for improving those points. So I think, you know, things that the government and the policymakers couldn't address through reforms, AI is going to come and address them through integration into how the government operates or private companies operate. So I'm quite optimistic that we're going to have an unlock of value in things that today seem very far off, and in 5 years and 10 years, we're going to look back and see Greece kind of operating as a major player in these sectors.
Happy you're still bullish?
I'm extremely bullish because people look at the last 10 years evolution. Obviously, it's been quite a significant evolution, but from a point that should have never happened. I think Greece, on every metric, when you look at European scale valuations or operations, we're still on the lower end of everything.
Correct.
So, and I don't see why in certain sectors like next-gen, hospitality, experiential, resi, we shouldn't be on the upper scale of that. So there's still a way to go on that front.
So let me change gears and Petinis, we have like almost 1 minute each. We mentioned technology, a little bit of AI. There is talent, you know, we used to say in Greece, in engineering and technology, right? And you being in a bigger platform right now, establishing a tech hub for the group here in terms of, you know, innovation, but, you know, providing services to the entire group, how this can help you as a group and how this can help, you know, the market itself, you know, Janus.
Well, I think in just the context of what we're discussing and with the limitation of time, I spoke too much in my first round, it is just an illustration of a point that other speakers have made. I think at this stage we are limited by our complaining, our, you know, direction in that side. I think it's a national championship talent here in Greece. And then we're also limited by our imagination, right? And the two are connected. So that's why I keep urging people to look at the data. This is another data point. The fact that there's been a very significant investment on the portfolio basis by the largest platform in Europe deciding to actually, you know, invest in Greece and incorporate the Greek Stock Exchange onto Euronext. But by the same token, it looked at it strategically and said, okay, what other type of greenfield investment can I make here? That's a foreign direct investment. And they actually chose technology. And I'll link it to, so this is the inauguration tomorrow morning that we're doing with the Minister of Finance of France and Greece at our offices of our Technology and Support Center. What does it mean? What is the data point we should be looking at here? Linking it to the complaining part. There's been investment in Greece, but they're only investing in real estate. You know, you can pick the type of complaining that we do. Again, look at the data. And if you don't, you're going to lose, all of us, in terms of what we're doing. So things have changed. And now looking at the data and updating our beliefs will allow us to also imagine in a much more efficient way going forward. So that's a data point. On your question, I'll leave it at that, where things are happening in a different fashion that people could not have predicted maybe.
So tomorrow you are going to announce something?
Well, it's, you know, it's already announced, so it's more the photo opportunity tomorrow.
So Tassos, very quick comment from your side, you know, following the comments of other speakers.
I spoke about productivity in my first comment. One of the most important constraints in productivity in the Greek economy is the endemic feature of the very small size of enterprises. Let me give you two numbers, because this is what economists do, they provide numbers. 99.4% of Greek enterprises have less than 10 employees. Another number, large enterprises have 3.3 times the productivity of smaller ones. So any deal that can help in increasing the size and introducing more knowledge into Greek entrepreneurial activity is a positive for growth. So acquisitions, mergers, cooperations, they're all positive. However, they are not equally good in the sense that some introduce more knowledge, new technologies, integration with global supply chains, and some others are more about exploiting dominant positions in the market. So I think all investments are welcome and all investments contribute to growth, but the priority, which should be also motivated by economic policy, is to increase the percentage of enterprises and via deals, among other things, that introduce positive externalities in knowledge in the Greek economy.
So, thank you, Tassos. Nikos, one quick comment, how you can remove this kind of bottlenecks, from legal or operational perspective when you execute a deal, if you have to pick one thing?
Yes, I think that we as Alpha Bank, and I think everyone who is an actual investor or a finance party in the Greek market these days, needs to look at more or less the same things for improvement because, and I think that the point was made, we're not competing against ourselves only. When we go out in the market and we try to attract foreign direct investment, we're competing effectively against all the countries in the region or potentially even globally. So we must continue our improvement. I think that the three main areas where we need to improve is, first of all, speed in the licensing and permitting process when it comes to public licenses. I mean, we have improved and covered a lot of ground compared to the pre-crisis situation, but still we need to take further steps by the introduction of the technology, AI, simplification of process, but clearly we need to accelerate there. The second issue is the judicial system. This has been traditionally a bottleneck and a big risk for local and international investors in the sense that we need to improve the speed of judicial review, and to the benefit of the government, they have announced a very large program for improving efficiency and speed in the Greek judicial system. Remains to be seen whether this will be achieved. And last but not least, whenever there is a huge market reform, please listen to the market participants. And we've seen some developments over the past years, but typically they leave market participants outside of the structural, at least, phase of any such reform.
Vasily, we have really 1 minute looking at me. So looking into the Greek market, where do you see, any mispricing?
Yeah. Just following up from this excellent discussion, something which is also very, very important and sometimes is overestimated. Basically, it's overlooked, the execution ability. So it's not about making the deal, signing the transaction. It's about what's happening afterwards. So this is the execution risk, which is, in the majority of the cases, it's not a business plan which is based on realistic assumptions, is not checked against data, benchmark, past performance, is more based on an ambition rather than an actual plan which can be supported. So this 100 days plan doesn't start at the signing of the transaction. It starts way before that, when there needs to be a very high-level plan, which is sustainable, it's realistic, change management is important, identifying risks, opportunities, these are key characteristics to make the deal successful. So it's not only pricing, it's the execution risk that counts as well.
Aziz, one last comment from you. You can pick anything, or you can tell us something about the consolidation of the real estate sector.
Consolidation. Look, I mean, we keep getting this question, and is going to be like consolidation or, correction, and I think this is very, very kind of early on to start talking about correction. I don't see any reason, except for, macro shocks or political shocks or etc. I don't see any reason why the market will move downwards at this stage. I don't see major catalyst for growth as an average market. I think the game is going to be played. I mean, it's hard to look at averages. They're very misleading. I think good quality products will keep increasing in price. Bad quality products will keep losing in price. And that average will remain stagnant. But we're going to have big winners and big losers within that average.
And with that, I would like to thank you. Thanks our speakers, and thank you all.